My first brokerage account had £127 in it, and a lonely little graph going absolutely nowhere. 5 years later, the same account showed over £100,000. No meme coins, no day trading heroics, just regular contributions into a single ETF through my stocks and shares ISA. I started out with VWRL, a FTSE All-World ETF. But then I deliberately switched to another ETF as my goals and investment strategies became more clear. What I didn't anticipate was that this single change would double my net worth. And it's not the one you would expect. I used to think investing was for investment bankers and people who own second homes in the Cotswolds. I kept waiting for the perfect moment, when the market was down 10%, when I had a spare £5,000 lying around, when Mercury was in retrograde. Spoiler, that day never turned up. But then I came across John Bogle's book, The Little Book of Common Sense Investing, and everything changed. I learned about keeping fees low, owning the whole market, dripping money in, and leaving it alone. Warren Buffett famously said, by periodically investing in an index fund, the know-nothing investor can actually outperform most investment professionals. ETFs are just a simple wrapper for that idea. I set up a direct debit into VWRL and stopped trying to be clever. I pound cost averaged, glanced periodically, and let time do the heavy lifting. You don't need to outsmart the market, you just need to outpersist it. I began my investing journey with VWRL, which is the Vanguard FTSE All-World UCITS ETF. With one click, you own thousands of companies across developed and emerging markets. It's super simple. It's globally diversified, it's low cost, and perfect for a beginner inside an ISA. For a while, I was 100% VWRL. It helped me learn the ropes without overthinking sector bets or stock picking. But as I learned more about investing, I developed a different investment strategy. I realized VWRL was so diversified, it felt a bit heavy in slower growth sectors for my taste. I'm young, I've got a longer time horizon, and I'm comfortable with more volatility if it means higher growth potential over the long term. So I sold my VWRL holdings and moved over to EQQQ, which is the Invesco Nasdaq 100 UCITS ETF. It's a growth tilt, more tech, more innovation, more wiggle on the chart. Yes, it's higher risk, but with decades ahead of me, that's a risk I'm happy to wear right now. Today, my core is EQQQ, simple, intentional, and aligned with my time horizon. Setting up an automation for your investments is one of the best things you can do. It simplifies the process, removes unnecessary or impulse spending, which creates wealth over time that you likely wouldn't have if you were in control of your finances. The process is simple. Payday lands, your bank fires money into your ISA, and a buy order is executed in your preset slices. The setup took me about 10 minutes. Better yet, fractional shares mean even odd leftovers get invested. That's pound cost averaging on autopilot where I get on with my own life. Okay, so right now I'm holding just one ETF, so there's nothing for me to rebalance. If I do add a second, both Trading 212 and Invest Engine make it so easy. On Trading 212, I pop them into a pie with target percentages. My direct debit can auto-invest and I can rebalance back to those weights with just a tap. On Invest Engine, I can set up target weights too and use auto-invest plus the built-in rebalance function to nudge things back when they drift away. Fancy some freebies? Use my links below in the description. Get a free fractional share with Trading 212 and a welcome bonus up to £200 with Invest Engine. For me, the ISA is king. There's no capital gains tax, there's no dividend tax, there's no self-assessment filings. It's easy. You should be aware of workplace pensions and SIPs. It's free money from employer matches and tax relief. If you're comfortable locking your money away until retirement, increasing pension contributions is one of the highest ROI moves in Britain. Once my ISA is funded for the year, I decide whether extra goes to pension for tax benefits or stays flexible. No fancy tax hacks, I just use the wrappers we've got. Have you only got £10 available this month? That's brilliant. Start with that £10. What people don't realise is that long-term investing is about creating a positive habit that generates wealth over time. Warren Buffett said, because no one wants to get rich slowly, the stock market is a device for transferring money from the impatient to the patient. When you get a pay rise, bump up the direct debit by an extra 10-20%. Do that a few times and you're investing serious money without lifestyle pain. Is it boring? Yeah, but it's effective, very effective. A £10 direct debit turns investing into a reflex. There's no willpower battle. There's no shall I, shan't I every month. The less you decide, the more you do. When £10 goes in automatically, you're not someone who wants to invest. You're an investor. Investors invest. We're all wired to favour now over later. Paying yourself first hides money from your impulsive, present tense self and gifts it to your future self. A preset amount means fewer choices, fewer chances to second guess headlines. Simple rules equals steady action. With pound cost averaging, dips look like a sale, not a threat. That reframing reduces panic and regret, two emotions that wreck your returns. Treat your ISA or your SIP as the don't touch it pot. That simple label makes raiding it feel wrong, which is good for long-term compounding. Start with your £10. Prove you can show up, then nudge it up when you can. These habits build wealth. The amount catches up over time. Your biggest risk isn't the next 2008. It's you at 1 a.m. convincing yourself that leverage is a personality trait. Write your plan somewhere you can see it regularly to remind yourself to stick to the plan. Contribute monthly, stick to your core holdings, and ignore the news. Don't be a hero. When the itch to tinker hits, read the note and repeat. If this resonates with you, give the video a like, comment, and subscribe so the next British beginning investor sees this ahead of any other get-rich-quick options. It costs you nothing and it helps the channel out a lot. I do need to tell you something. A growth-tilted portfolio like mine moves a lot. There are months that the Nasdaq 100 feel like a roller coaster. Double-digit drops followed by big recoveries. VWRL smooths out that a touch. Over multiple years, the line trends up because the contributions keep coming and compounding gets to work. The real magic wasn't timing, it was time. For me, 6 figures came from 3 levers: time in the market, regular contributions, and low costs. Every 6 months, increase your ISA or pension contribution by 1%. You won't feel it, but your future self absolutely will. Pair that with a clear and simple ETF plan, and you'll cross 100k quicker than most people finish off paying off finance. If you're interested in investing, please check out my links in the descriptions below for the investing platforms I use. Get a free fractional share with Trading 212 or a welcome bonus up to £200 with Invest Engine. Remember, no hot tips, no lucky break, just VWRL to learn the ropes and EQQQ to tilt for growth. A direct debit and the patience to leave it alone. Start with whatever you can next payday. Keep going and let the graph take care of itself. The best time to start was years ago, but the second best is the direct debit you set up today. If you enjoyed this video, don't forget to like, comment and subscribe, as this really helps out this channel and helps me keep making more content. If you're ready to go deeper, I've put all my ETF videos in one easy playlist. Everything I've learned in one place, just for you. Hit play and check it out now.